Hey traders, this is Ron Haight. Hope you're having a fantastic day. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk, and specific financial issues should always be addressed with your financial advisor. We'll kick off here with the Qs. They were up 0.5% today, still playing ping pong in here inside this little wedge, or if you want to call it a pennant, but it's also a bear flag. Keep an eye on the 200-day moving average as well as the low from 1011, just like we talked about in last night's video. A close below both of these would open up the door for potential another slide. Take a look at the spiders. The SPY, which I have a bullish position in, is also playing ping pong here. The 200-day it's clinging to, and we want to watch that 1011 low as well. We close below that closing low on 1011. Again, that's what starts opening up the door for potentially more downside action. The diamond's down 0.5%. It did sort of break outside the pennant, but that's not the end of the world. It's really all about this 200-day moving average. I mean, if I zoom out here, just like I showed you in Sunday's video, we've had multiple attempts to close below it and pretty much held. We get below 250, then we drop to 240. That's the equivalent of 1,500 Dow point. Then there's another 500 plus Dow points, depending how the support looks in here. So again, I would want to set alerts at that 200-day moving average. The IWM, the Russell, was down 0.2%. New near-term closing lows again. The bigger targets are down there in the mid to upper 140s right now. If we take a look at the VIXs, we'll start with the $ VIX, which is the S&P VIX. We had the pop, the pullback, and we're still holding in. This is still somewhat bullish, which goes with the idea of the S&P being bearish right now. And then if we look at the VIXN, $ VXN, this is the NASDAQ 100, this one's even looking more bullish right now. So they're still matching up. Caution is still warranted across the major indexes. Now, pod stocks got beaten up today. Here is CGC. This is Canopy Growth. Lost 11+% on the day, spike in volume. We closed below the most recent closing lows. The next major target now is either 30 or down in the mid-20s. That's a long ways off, 25%, 35%, getting all the way down there. So heads up if you're trading CGC, the technical chart has rolled over here. If we take a look at TLRY, Tilray was down 15%. This one also broke the 20-day EMA. Not as much volume as we've seen over here, but still quite a bit, 5.4 million shares. The 50-day is showing right around 100. You have this little low here, but then, it doesn't take a whole lot to see where the next consolidation area is, which is a fraction of where it is right now. So pot stocks did roll over today as a whole. Here is Netflix. There was a $2 billion bond auction that was announced today just to cover the cash burn over the next 2 quarters. Yet the stock only finished down just under 1%. A lousy $3. That's not very much. In fact, it pretty much held on to the 200-day moving average in purple, which is right around 330. If the stock gets below the low from 1011, there's also a low right here, then that would open up the door to another bout of potential selling pressure down in the 275 area. So potentially good news for Netflix, the fact that it wasn't crushed today. But before this chart can turn bullish, it really needs to get back above and at least clear the highs, 385-ish. Another stock that had a rough day today besides pot stocks was Nectar Therapeutics, 17%. Took out the lows violently, you could say, from July. Next target, low 20s. The stock's basically at 40. That's not quite a 50% haircut. I mean, that's a massive downside target. Doesn't mean it's going to get there, but that's the next major one. And I did receive a question on bank stocks. Bank of America was down 3% today. It did close below the most recent lows, not by a whole lot, but by enough. The next support area is around 26, another buck plus lower. And then if we go back 2 years, here's going to be some support, and then you get back in here. Everything from the banks is pretty much looking bearish right now. If we look at Citigroup, it lost 3% today. More support at 65. If 65 falls, then it's down to 60. Here is JP Morgan. They lost 1.4%. They still have a pretty big swing low right around 103. Below 103, then we go down to like 95 and so forth. But if you notice, just like some of the major indexes, once it got below the 200-day in purple, it can't get back up. Here, it got through it, but it's not doing that right now. And then here's the banking ETF XLF. It lost 2% today. It did start to close underneath these lows. There's a little bit of support, 26-ish, and then you start getting down to the next major swing low down here. Bottom line is the banks are bearish. That's usually not good for the S&P until the banks turn around. It's probably going to be hard for the market to really push higher as well. That's it, folks. I hope you found the video helpful. If you have any questions, you can always email us at CS, which stands for customer support, at markettamer.com, or you can leave a comment in the YouTube video. Wish you guys all the best, and I'll see you in the next video.